Today is Friday the 13th, May 13th. Let's take a look at retail. And if there ever was a sector fitting for Friday the 13th, it's retail. We looked at a couple of stocks yesterday. We're going to look at them again today to see how they're doing. Let's start with the XRT ETF. This is a retail ETF. And it's in candlestick format here just for a change of pace. Got a double bottom earlier in the year, breakout, nice run, and then it just stopped. Back below its moving averages, and here it is testing the center line of that double top, double bottom pattern. So this is at support. You can see a mini hammer candle it's trying to form there. It's still way early in the day, so we don't know if it's going to complete that, and even so, it's not even oversold. On balance volume at the bottom here looks terrible, so I don't know if this is a buying opportunity. It may have a little trading bounce, but retail looks just pretty bad. Let's move on. Got a list over here on the right here. Here's Macy's. We looked at that the other day. Big collapse. It's down in this long-term Fibonacci level. I'm not going to draw it today. You can go back and look at the other video if you want. This is a support level of sorts. You really got to have nerves of steel to try to buy it here, but it is at a level. It's down a tremendous amount since its peak. It's definitely oversold on its RSI here. So, is Macy's any good? There's a news story that says now Amazon sold more clothing than Macy's did over the last couple of months. So not a good trend for that stock. Kohl's, another big loser this week. It's a bullish engulfing bar today. But is it really great? Let's take a look at volume just to see what's going on there. And volume yesterday, possible selling climax actually. So this actually is another stock that's so crushed that it may be so hated that it could go the other way. But I'm not gonna argue to buy retail stocks because each day something new is happening. And take a look at today with Nordstrom. I mean, that's awful. It's just a terrible looking stock. Maybe heading into a selling climax, but probably not yet. Dillard's, another department store. Gap down open, trapdoor open. Now it's trading higher. It's around 11 o'clock on Friday. So you can see a lot of oversold action here. But again, the trends here are really just terrible. Target starting to break down. Let's draw a support level in there. So you have possible double top, or some form of it. You have a breakdown, a test of the breakdown, and then a gap down. That looks terrible. I would not say this thing is done falling. Although again, this thing started out really bad today and they've come back quite a bit. The XRT is actually in the green as we speak. It didn't start out that way. Lows, big resistance on top here. Let's put the line in. Big resistance there. Been flat since it ended this rising trend. RSI is trending lower. On balance volume trending higher. So you have conflicting indicators here. Let's take a look at the weekly chart. That is a big resistance level. And in the weekly format, RSI is not terrible. It's really mediocre. On balance volume not really relevant here. So back to the daily. Lows, it did break its trend line, but didn't fall, and now it's in a rectangle trading range. So breakout to the upside, good. Obviously, break down to the downside below that 50-day average, as you see in red. So wait and see on lows. There could be a good trading signal happening pretty soon here. And finally, Walmart, just because we feel bad for it. Let's get rid of the volume down there. RSI is weak. On balance volume, kind of flat. Nothing happening there. You can see the trend is broken. Is the trend line there? Is it there? It really doesn't matter. Let's just leave it there. So you have a gap down through a trend line. It's through the 50-day average to the downside. Now looking at the 200-day as possible support. So not looking great here on Walmart. So overall, retail, the retail sales numbers were actually pretty good, best in a year this morning. And these stocks are just saying something quite different than the economic reports. So there you have it. Always look at the charts. don't just go by these reports, because they're just looking backwards while the charts are looking forward.